Hi, everyone, and welcome to Bitcoin Analysis Beyond the Block for November 2024, our last one for the year, brought to you by Ainslie Crypto. My name's Chris, and today we have our expert panel with Joe and with Isaac. How are you going today, gentlemen? It's a very exciting time for Bitcoin. It's all coming together, and we've got Christmas. It just doesn't get much more exciting than this. How are you?
Doing great. It really is that time of year, so I'm feeling great actually.
How about
It's
you, Joe?
finally happened.
It's
It's
finally
finally
happened.
it's finally happened.
There's so many sort of memes that we're living at the moment. It's happening. Are we in alt season? There's lots to discuss today. We've got a lot of charts to get through, so we'll dig straight in. We use our usual format. We'll go through the big picture macro, Bitcoin market analysis, then into the technicals. Let's start off with that macro before we get into the exciting Bitcoin angle of this. We've seen an interesting development here. I think we might have preempted this a little bit previously, talking about the potential for it to go back into early cycle. What's your take on this, Joe?
Um, well, flicking between the early and mid cycle, you can see we're still moving in an upwards trajectory. It's for me personally, it's neither here or there because we know that we believe it's going to continue to expand above that line into expansion in terms of where we are in the cycle, moving into mid cycle and late cycle towards potentially the end of the year next year. I'm like, to be honest, I'm as I said, neither here or there on whether it's middle or early cycle at the moment. Yeah, what are your thoughts in the back and forward?
Sort of the same, that it really doesn't matter. I mean, I would almost ignore it in this where we are in the cycle. I'd sort of ignore that fact that we've technically on the data fallen back into early, because the reality is that we expect more liquidity to come. We expect the drivers of that to keep us moving upwards. So, that's to me is just a data anomaly. And it's not like we haven't seen them before, because you even look at, we had those sort of two blue dots there that arguably the green was out of whack. It doesn't really matter. We're still there. And the other part on that for me is it doesn't make a huge difference in terms of our how we approach it, asset allocation in that environment. So I wouldn't be too worried about it.
We expect a more solid mid-cycle coming in the next couple of months. As we'll go through this presentation, we'll talk about inflation and growth, and rising growth and inflation is definitely mid-cycle. So we'll be touching on that a fair bit here.
And absolutely. And let's jump straight into that, because it was another interesting month. We've talked about this a few times, that we've seen the concept of growth here split up into the manufacturing data and the services data. And you're seeing the services data really take off. Manufacturing still, sitting here fairly lackluster. What's your view on that? Should we be paying more attention to services? How do you sort of think about it?
Yeah, I just wanted to firstly touch upon, I don't know how often we've sort of mentioned this. We do talk about it every month, obviously, but you can look at this as somewhat of a barometer for the economy, right? So though we do believe, as you can see, services has been ticking up, and with the Trump administration coming in, there's a lot more certainty around the economy and asset capital allocation and employment. I know we've been saying for a while that we do expect the manufacturing to pick up, but with that sort of certainty and business confidence starting to show up through in the surveys, you would definitely expect that to pick up. I suppose I also want to touch on what that actually means. So if you see that business confidence picking up in the economy, that's how you get your higher growth. You pick up in inflation as more and more people, as businesses expand, employ more people, and those people have more money to spend into the economy, and that's the virtuous cycle of how this chart works.
And when we put our indicators, I just flipped over to the 3-month leading indicator. Those leading indicators also factor in inventory, future demand, so what sort of orders are in place, and they're all looking pretty positive as well. So I think that aligns with what you just said, that overall we've just been through the election in the US. There's lots of things that are looking pretty positive here.
Yeah, and it takes a while for those things to come through as well. So the inauguration's is not until January. That doesn't mean that people aren't thinking, or our businesses aren't thinking about it right now, but it can still take a couple of months for all those businesses to implement whatever strategy they want to implement over the course of next year as well. So it's a slow moving beast, as we always say, but higher blue line means stronger economy, more spending, more inflation, more growth, which leads into our moving into mid cycle and eventually late cycle, potentially at the end of next year.
And inflation is the other part of this story. And we've seen the first crossover here really for a long time, probably nearly almost a couple of years, if you go back, depending on which point you want to pick there. Our leading indicator actually suggesting inflation is ticking up a little bit and getting ahead of the official rate. That's not necessarily negative here. We've said that before, but it could be indicating that move or further justification for not giving too much credence to that red blue dot.
Yeah, 100%. And at the end of the day, we're still sitting just under 3%. It's not like it's white hot inflation. It's not like it's something to worry about at this point. We've obviously carved out a bottom, and ideally, as we mentioned before, the Fed and the US government are probably very happy for it to run at 3%. So it's not anything. I expect it to rise potentially quite slowly. It's when the rate of change is high and you get that really fast rise in inflation, like you saw in late 20 and 2021, which starts to cause real problems.
Just that concept of them being happy for it to run at 3% potentially. I mean, at the end of the day, inflation is withering away or attempting to wither away all of that massive amount of debt. So that's why you're saying that, isn't it?
Yeah, 100%. So if you've got higher growth, then what? Like say you've got growth of 4%, but your debt's denominated in 3%, then you've got positive real growth of 1%, and you're able to pay off your debts easier.
Yeah. So it does make sense that that's what they would be targeting.
Yes.
Why we keep talking about all of this is, of course, we are leading into this concept of global liquidity. But first, we like to look at what we just did, how the economy is actually growing and the inflation aspect to sort of figure out where we are in the macro cycle. And then we overlay that with where we are in the liquidity cycle, because we've shown multiple times this, first of all, that we've got wealth being highly correlated with global liquidity. But more importantly, for what we're talking about today, Bitcoin and this massive high positive correlation that exists between global liquidity and Bitcoin. So it's something that we need to pay attention to. We have seen this month the data pick up and actually tick us over the 50% line, which actually gets us into growth. So overall, across the globe, we've got a liquidity growth situation, which is a pretty positive development. That's our long-term view. But zooming in and looking at the shorter term one, it's just slightly under the line on the data at the moment, but that would be a pretty positive development, I think.
Well, it's stalled out on the short term, but the general direction and what we've been calling for a number of months now for this back end, late Q4, is for that liquidity to pick up. So there's going to be gyrations in the short term where when we move over to the weekly chart, you'll see it as well, where you have the dips, but we're not too concerned about what happens week to week. It's more about the direction and trend.
And you can see that direction and trend really playing out in the colors here on our heat map. We're starting to see actually some more greens. Before, we were seeing a lot of these yellows as it was moving away from red, but there's not a lot of red in here, really.
No, not at all. And it's certainly changing. It's getting greener every month. So
yeah, all heading in the right direction. When we overlay Bitcoin now, just reminding everyone that this is the average Bitcoin price for the month. So that's obviously we're much higher. We're at the $90,000 sort of range now, but it was picking up pretty much aligned. It's always a bit difficult because this is a chart isn't logarithmic. It's just showing us, the direct link there, but it has definitely been picking up as liquidity has been pushing higher. So you would see that as fairly positive. We've been giving actually a lot more weight to this chart because it does take away that confusion around, looking at it just as a normal arithmetic chart versus a logarithmic here. I mean, it's just been a beautiful breakout, hasn't it?
Yeah, 100%. And that's in my eyes, that is a fantastic looking chart, and I'm sure Isaac's going to go over his chart and he'll probably end up saying the same thing. And the viewers will probably notice there's a little bit of different momentum and liquidity there, but once again, it's not a straight line up all the time, and we've had a fantastic technical breakout, which it looks like it still has a fair bit of legs in it. So it'll be very interesting to see how this plays out over the next couple of weeks and into the end of the year. But if I was to make predictions, I would base purely on that. It's heading higher.
Even in hindsight, you can look at it and you say, "Oh, it was just a bull flag." It's just like,
yes.
But when you're in it, you're feeling all the emotions, and you're not aware of what's potentially going to happen. And what we obviously have been believing this whole time through has come to fruition. But we're just at the starting leg of that. So, yeah.
Well, Isaac had so many emotions through this, didn't he? He was telling us it was
Very
going up. He was telling us going down. Joe and I, we only had one emotion, and that was up, up, up. But anyway.
Do we do our victory lap yet, or is it too
No, it's always a very dangerous thing to do. Just sort of wrapping this section up, Joe, and this is a question I've had quite a bit when I talk about this chart. We have seen at the weekly level, global liquidity really not taking off. It's been pulling back. In fact, it's sort of back to levels that we saw much earlier in the year when you look at it in nominal terms. So that's actually trillions of dollars. And you've got really Bitcoin taking off against that backdrop. Is that partly technical? Because the question I get is, well, hang on, that's pointing down. This has been absolutely pointing up, like we're in that $90,000 range. Why is that taking off when liquidity is not coming down? I mean, there's a few layers to that. Can you just maybe step us through this?
Well, you think about, we've been having a huge consolidation for 6 to 8 months, and at the end of the day, there's only so many sellers in the market before you start moving up again, right? So, you get a massive consolidation period over that time. You'd expect the breakout to be quite large and clean, as in the one that we've seen. So it's sort of shaken off that little dip in liquidity, which we would argue, I know we were talking about this yesterday, had a lot to do with collateral values. So rising US dollar, bond volatility, and even we were saying yesterday that it doesn't even you don't even need the dollar to come down, for example. You just need it to somewhat stabilize and stop ripping. So, and that will help improve liquidity conditions. And I think we're potentially going to be moving into that scenario in the next couple of weeks, which will be positive for that orange line and start pointing in an upwards direction.
All right, I just gave him a hard time, but he has actually been remarkably accurate on all of these measures on the shorter term, telling us when it was going up and down over the last several months has been very accurate indeed. So, Isaac, start us off. You've used this really to start off for multiple times, and it's painting a pretty exciting picture here because we're getting the breakout here as well.
It is, and I've been talking about the rebasing and how that consolidated period has actually been beneficial. And we're starting to see that in play now. So obviously, Bitcoin is now sitting at around 90K USD, and the MVRV is only back where it was when we hit that high around March, I think it was. So it just shows you price is so much higher, yet the MVRV deviation score is just to where it was, at March. So that's really healthy, and it looks a lot like the 2019 sort of phase. Obviously, the time horizons are slightly different with everything, but it's looking very good, and it's looking like it's starting to see that push up, which is what we've been talking about, what I've been talking about. Whether we don't know how high it's going to go, but it's certainly looking very good.
And you've said in the past on this that you wouldn't be surprised if we ended up getting a lower high, but there's still a long runway to go in that scenario. There is also an argument to be made, and I'm interested in your opinion. We'll come back to this a bit later as well, that this time might be different. It's always dangerous words, but because of what we've seen out of the US election, do you have a view on, like, has what we've seen there and a very positive sort of sentiment, at least around Bitcoin, is there potential that we actually do break up higher and we don't see that lower high in the peak here?
I think there is potential for it, but it's just the only factor for me personally. I just think it's a lot harder to get there, as the market cap is so much bigger than what it was in previous cycles. Sure. So it's just going to be a lot harder to push it up to those very large deviations. But I'm certainly not ruling off the table. But personally, I'm not expecting it to break above the 10 region or 8. I'm probably personally around. For me, actually, it's more about timing opposed to where we actually land. Sure. So I'm not really here to predict how high we're going to go. Although maybe when we get to that latter stage, then I'll start to be calling targets and stuff. But as of right now, I'm also concerned about the timing. And right now, we're looking pretty good in the time factor.
Okay, fair answer. Sentiment, we always like to look into this. Obviously, as things have got more positive, we would expect the greed to pick up over the fear. Is it? Are we really at the top, or like it feels like it could go a bit further there?
Yeah, and if you look at it, we can definitely stay elevated for a long period of time. We saw it in the last cycle too. So I wouldn't really be putting any too much weight in it, but it just lets you know how the investors are feeling. Obviously, it's very, very choppy. And I would say this run has been more choppy than the last one because it was more trending in a certain direction. This one's just been boom, 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 up and down. So it just shows you that a lot of people would have got faded out of the market during that 7-month consolidation period, which is very good as we've now broken up, which means a lot of people are offside. So it's going to push people, it's going to keep price elevated.
And when we look at that on the shorter term, because this was your shorter term metric, similar story. I mean, it's certainly looking.
Yeah, similar story. I would say this month's been a lot harder to read. But yeah, it's definitely pointing towards right now where we are at 0.8. That is quite in the obviously green section. So it is potential that we could consolidate here for a bit. But I've got some other charts that also suggest we might have a push up. So quite iffy right now, but yeah.
And I suppose we just need to be a little bit careful that we don't get overly bullish or too carried away.
We're in that phase in the market now where we just wait and we just hold and wait and be patient. You know, that's not what we're about. So that's what I'm thinking right now.
Looking at specifically the RSI here, a little bit of a tick up.
Yeah.
It didn't get down necessarily as low as you would want, but also this is kind of what you expect when it's a really pumping market, isn't it?
Yeah, we held the 50% region, right? So we're sitting there. Again, it's looking like 2019. So who knows how high we're going to push up, but I would definitely expect it to be pushing up a lot further than what it is now because we've had that flip. And also the market cipher is quite good. So we're going to be seeing that. And I think we're definitely primed for higher prices for sure. Just the timing's going to be quite tricky, but I'm going to try and use the tools I can get, especially in the next coming months. It's going to be quite crucial to be tracking this very in depth.
Absolutely. And I do think that even just the fact that that's allowed it to pull back there is enough, right? Like it needed to be able to pull back that sentiment a bit.
The one interesting thing about this one will be just to see if there's some sort of RSI divergence in the next coming months. If we start to push up very high and the stochastic's still lower, potentially signaling some dangerous territory, but we're not there yet. I'm not going to push that far forward yet. So far looking good. And yeah.
And you also tend to look at Google searches. I remember you saying last month that they hadn't really taken off, but they certainly have this month.
Yeah, I was saying about when prices reach those all-time highs again, people will inevitably come back in, and like as retail always does. So started to see a huge run up in that interest there. And that's just going to be how it is, right? It's just typically how the market works. And you can see in the last cycle, we had sort of extended periods of interest. So it obviously did fluctuate, but it's probably not going to be a large spike and down again. It probably will consolidate at a higher level from this point onwards as we enter that latter stage of the market. And a lot of interest from retail has been coming from the meme coin sector. So that's been pulling a lot of people in, especially the younger folks who are more into the gambling aspect, which is obviously getting interest in crypto and then eventually funneling into Bitcoin, probably because people end up losing a lot of money in meme coins and they realize, maybe Bitcoin's the best option here for long-term growth.
There does seem to be a path that people need to follow to get to that point where they eventually just go, I might just hold on to some Bitcoin. This one, you talked about this a number of months ago and said, I'm not sure if this is actually a signal, but I want to track it. And it looks to me like you've really picked something that has a bit of value here.
It looks quite weird. And I remember doing it and looking at it. And I just draw that support and resistance line just because I saw that obviously there was a bit of resistance and support there. Without even thinking about it too much. And it's turned out to be quite a good metric. And obviously, since then, we've bottomed within price and then within the active addresses. I mean, it does make logical sense, when price picks up, more addresses are being active, right? Obviously, now here we are. So it's going to be interesting to see how high it gets. And it does tend to be a good market top signal indicator. But you obviously don't know how high it's going to go. But obviously, where it's been previously, that's going to be a level I'm going to be looking at. So when we get there, very, very crucial.
It's probably got a very high correlation sentiment, that one.
Yeah, for sure.
You would think so. I mean, we did talk about it previously that maybe it was different because we had the ETFs and, do you actually get all of those new addresses? But it does appear to be playing out pretty much.
One of the ones I will also add is I've been watching some folks talk about this one is the Coinbase, the ranking on the App Store. So when it's elevated at number one for an extended period of time, it typically signals retail's obviously in and potentially signals for a top. So I might be adding that one next month.
No, that would be interesting to see because it does make sense logically. And you brought this one back too. You haven't had this last few, I don't think, but looking at this, this chart, it's starting to give us that color that we're maybe at that point of getting a little bit interesting.
It's at the point where we have to start to think about not selling it all, but just holding and being cautious and watching everything, right? Because that's where the level where historically it's been obviously the time to start flipping your biases. Obviously, we're not right there yet. I think we're at 75, but once we start hitting 80 plus, that's when you got to start thinking about potentially taking some lifestyle chips off the table or all that kind of stuff, right? And I'm not going to go against past history and disregard this metric because it has been quite good in terms of indicator. It is an aggregate.
It lines up with what Joe was talking about at the start, where we're above that 50% line, in the liquidity. We're in the second half now, right? So
yeah.
You could, even though it sort of dipped back below, you could argue we've made it to the halfway point and we're in the second half. That's kind of what this is also saying. So the more metrics we have that tell us the same thing, the more confident we can be.
Yeah, and this one's good because it's an aggregate of it's 9 different metrics. So it has quite a good hit rate.
Excellent. This monthly Bitcoin analysis is brought to you by the Ainslie Group, Australia's trusted choice to buy, sell, and swap gold, silver, platinum, and crypto online or in our Brisbane and Melbourne showrooms. With over 50 years of operation, we are a reliable partner in wealth management. If you're looking to buy tokenized gold or silver anywhere in the world, check out the Gold and Silver Standard, the security of real-world precious metals combined with the flexibility of blockchain. All right, Joe, this chart that you brought along, and you've really covered this ever since the ETFs went live. Really, I found quite interesting that the last 2 metrics seem to be dipping in the negative there. What's been going on with the ETF flows?
Well, we obviously had that huge run up after once it became obvious that we were going to have a Trump victory, especially with the Senate and the House. And, we'll talk about it in a couple of slides, the pro-Bitcoin regulations, the ETFs. Like the amount of inflows into ETFs over the last couple of weeks, apart from those last couple of days, were just insane. We're talking billions and billions of dollars. So I think maybe even one of the days it might have been a net $1.3 billion or something, which is just crazy when you think about it. So obviously that's going to push what they call the funding rate quite high, and the futures will trade at what would be a reasonable premium over spot price. And as we've spoken about before, a lot of hedge funds will buy spot ETFs and short the futures and capture that premium. So what we're probably looking at there is some of the money coming out of ETFs as those basis trades have been closed off. But also we've been saying since very rarely for the last few months that once we break all-time high, we're going to see some huge volumes in ETFs, and that's exactly what happened.
And just logically, people are going to take profit who might be new, and 100%. This is the first time they've bought. This might be their first cycle where they're using the ETFs as that vehicle. So, breaking all-time highs, they made a lot of money. When you think about where it started at the what the price was at the start when they were first released, all pretty logical.
Well, even if you'd gotten in before the election results, you've made 20%. So it's you might have bought on a whim before then, and you might want to take some out. I don't know. Everyone has their own reason for selling. So,
but I think this chart really paints the picture of what's going on. And when you look at that previous one, go, oh, there was a couple of days of pullback. Well, actually, let's look at it. Let's compare it to something else. Talk us through this. I just find this fascinating.
So this is the iShares gold in the white and Bitcoin's in the gold. That's the ETFs that BlackRock provides. So as you can see, this chart goes well back into the mid to early 2000s, and you can see it's taken quite a substantial longer amount of time for gold to reach the same market cap as what Bitcoin has currently had in terms of holdings in the ETF. So I've sort of butchered that a little bit, but the point is that the assets under management in the Bitcoin ETF is reached gold within 11 months, which is just absolutely insane. Crazy.
That just tells you everything you need to know there. That this isn't. There was a lot of speculation at the time. Was it really going to be a success? And I don't think anyone can deny the success of what we're seeing there.
Yeah, and it's a testament to just adoption. That's basically what we're looking at. We're looking at adoption right now. And the ETFs only launched 11 months ago, so we're still very, very early. A lot of people will be looking at this going, "Oh, I missed the boat," blah blah blah. These adoption cycles, in terms of an S curve, we're still very early in the S curve in terms of we're probably at the start where we start to actually pick up into the steepening of that curve. So I would say we're still early mainstream adopters if you're getting in now.
very interesting to see what that looks like at the peak of the cycle, and then actually again what that looks like at the bottom of the cycle in comparison to gold. I think that'll be a comparison we'll make at those future times. The funding rate you mentioned before, it's quite an interesting thing to understand, because it really does seem to capture sentiment in real time, what people are prepared to pay.
Yeah, so the funding rate, for those unaware, is the cost to go long on perpetual contracts. So because you are using leverage, and you know, you're playing with a derivative, it does actually, when the market's very bullish, you've got the exchange will charge you what's called a funding cost to stay long, because there's so many people going that way. They want to encourage people to go short to anchor the price back to the spot price. So as you can see, the funding got quite high, like annualized it was around well over 35%. So people were willing to pay a 35% annual premium to bet that Bitcoin was going to keep going up when we had that surge. So look, what I more so brought this chart along for was the fact that we've had a good sentiment reset, as in the funding rates have come down and the price hasn't absolutely collapsed. Because usually what you'll see is a huge run up, huge jump in premiums, and then once the premiums pull back, it's generally because the price has collapsed and a lot of open interest has been taken out of the market.
Yeah, that's very interesting, and it could be a sign of a maturing of those markets as well, because these do operate a little bit differently in the Bitcoin space and the crypto space to what they do in traditional markets. So we don't really have metrics to compare them to, other than the metrics that are being developed over time watching crypto. So it is quite interesting to see how that has behaved. There certainly haven't been low rates.
It's just holding up well. Yeah,
it's holding up exceptionally well for that.
Yeah.
And part of the reason for that could be this chart, which I also think is a very interesting one to look at. You've got Bitcoin across the top here, pretty much every year the best performing asset class, except a few exceptions.
Doesn't that just line up nicely with our early, mid, late cycle and bust phases? So,
yeah,
you'd argue, as we have, that we're moving out of early cycle into mid, which will be 2025, and expecting that sort of bust phase at the end of 2025 and into 26. So,
and isn't it amazing that when it's not the best performing, it's the worst?
Well, that's why we're here. We're here to tell you, well, not tell you, but inform of when we think you should be holding, and when, we're not there yet, but we'll certainly be letting the viewers know when it's time to probably start moving out and taking chips off the table.
Or when we will be doing it, at least.
When we're doing it, that's right.
We may not be right, because this time could be very different, but that's what we'll be looking for, and hopefully we can avoid that one, so that when we're back in for the next one, when we get the big returns again, that's the plan. Now, part of it, this time could be different argument. What's really caught my attention, and I'm so cautious about this, because I do realize that there's a risk of getting caught up in political narratives. The argument is you should just ignore all of it, right? You should just look at the price action, look at the charts. But it is pretty hard to ignore statements like this one. And this is not legislation. This is, as in, this isn't law. This hasn't been accepted, but it's something that's on the table.
Yeah, Cynthia Lumens is a senator in the US, and she plans to implement or bring this bill to the House and the Senate within the first 100 days of Trump being elected. And the reason why people are probably taking it more seriously is because the Republicans do have control of, obviously, the presidency, the Senate, and the House. So there'd be a more likelihood of something like this passing. So just to be clear, what she's proposing is a Bitcoin strategic reserve, where the US purchases not only holds onto its current Bitcoin, stops it being sold, but also purchases $200,000 over a 5-year period to accumulate a million Bitcoins. And she's actually already sort of mentioned as well that might even include selling some of the Federal Reserve's or the Treasury's gold to help fund the purchase of that. When you can print your own money and buy assets, I don't know why you need to sell anything else. You just print the money and go buy it. But it's about the intent, and it's certainly a narrative shift from the last 4 years, where you wouldn't necessarily say the Democrats have been super anti-crypto, but they've certainly put up some barriers. When you're talking narratives, I'm also quite wary, because every cycle there's a new narrative, and the new narrative always seems more powerful than the previous one. I remember back in 2021, 2021, it was all the institutions were coming to buy Bitcoin, and it was never going to go down. I don't know if you guys remember that, but obviously we did go down. when liquidity dried up and the narrative changed. So yeah, super wary. But in terms of a mid to long term perspective on where Bitcoin is going, it's certainly not getting banned. If that's what everyone's fear is, So yeah.
And you do have to just wonder if we are going into a 4-year period where everything is very positive, or we yet to see it. Like everyone says a lot of things in an election campaign that don't necessarily translate into reality. But based on bills being put forward like this, what does that do to the price? I mean, Isaac, I'll ask you this because that really just blows some of those previous metrics out of the water. This is the black swan in a positive direction. I don't know what that's called, but this is a white swan. I don't know what it
white
is.
Swan.
A white swan, we'll call it. A green swan, a big green candle. What does that do to the price? Because I can imagine if you've got 1 million Bitcoins that are effectively being guaranteed that they're going to be purchased, the market is going to front run that phenomenally.
I think what my take would be is obviously when liquidity does drive eventually, what it would potentially do, having such a strong narrative behind, not even a narrative, but like if that actually comes to fruition, that's very bullish, right? I think what it means is the bear market won't be as strong for Bitcoin. Not speaking for other asset classes, but specifically for Bitcoin, if people know that it's because there's such a strategic reserve and there's going to be this set amount of buying, I think it definitely limits the downside. Absolutely. That's what I would personally expect. People would be expecting, narrative shift, right? So it'd be the other way around and people think, oh, this is going to happen, this is going to happen. But if that's actually going to come into place, I think it definitely raises up the potential for a much less damaging bear market for Bitcoin.
Is this how we see? Sorry, Joe. Is this how we see $1 million Bitcoin?
What do you mean by that? Like, as in this cycle?
Is it if this was approved, right? If this bill passes, do we see $1 million Bitcoin?
It depends where we're in the liquidity cycle.
We're not going to get the answer, definitive answer from you, Isaac. You're just going to say could go up, could go down. Joe, is this what drives us to $1 million Bitcoin?
Eventually,
my answer is no, Chris. For the record, my answer is no. For the record.
Answer's no. Okay, what do you
think? For this cycle.
Yeah, eventually. I'm not sure if it's this cycle, but I was just going to say this is, something like this, the fact that this has even been introduced and whether it passes or not, you start to see game theory playing out. Like if it got introduced and you start, like, okay, every single company in the US has just got the green light if they want to do the Michael Saylor strategy, if they want to, do that playbook. And then all of a sudden you've got the game theory with other countries as well. Like, well, if the US is adopting it, maybe we need to get on board, and you start seeing countries start to adopt it, like you've seen with El Salvador. So it just becomes a huge rolling snowball. And that doesn't mean you can't have bear markets. You absolutely certainly can. But maybe Isaac's right there as well. It's just not as deep as we usually see.
Okay, so neither of you will commit to $1 million Bitcoin if this bill is passed. Right.
You can commit if you want.
Oh, no, I asked the questions. Just quiet down in the gallery there. Thanks. All right, over to the technical analysis. Isaac, you've done a lot of work on this and you've kept us up to date throughout. We are approaching that green zone there, which you've told us historically is the time where we need to consider taking the profits. We're not there yet, and we could, who knows how high we get before there. Could be $1 million if we get that bill passed. But what's going on here?
Look, as I said last month, we are entering that phase, not yet. So we obviously have a few more months until we get into that green zone. And when we're in that green zone, that's where I will be flipping my bias and starting to look for top signals. So obviously that you can be in that phase for a very long time, and price can keep jumping and up, right? But the thing is, depending on how your portfolio is and all this kind of stuff, you got to start taking chips off the table if you want to be safe, opposed to just holding and thinking you're going to time the exact top, because 100% most people can't even do that, and most people don't do it, and you won't be the one to do it. So you have to be careful, and you have to essentially DCA out if you believe that the cycles will follow, the general ebbs and flows of how cycles work. But if we're going to get the bill passed $1 million, then if you believe that, that's going to be a different story. But just typically on how cycles work, in that green zone is where I will be flipping the bias. So obviously we're not there yet, and I don't know how high price is going to get when we're there, but we are in the blue sky phase. So upside potential is definitely there. But time horizon wise, that's when we start to flip.
And I love that we've seen that consistently right ahead of time. We know where that timing is going to be. This is probably a little bit of a warning, I would imagine, here, where we're saying to see this weekly stochastic really up very high. But I suppose you're going to say that it can stay high for a long time.
Yeah, just look at the last cycle. Just look at where it was starting to peak up, right? So you literally sat there for large periods of time. If you go to the stochastic, so just drop to the stochastic, and just to the one that's a bit more left, you can see that it was quite elevated for a long time. And the difference between price in that little gap there is huge. So if you bought at the bottom and you sold there opposed to the latter end of the stochastic, there's a very large difference in the percentage moves you get there. That's why the DCA strategy is probably the best thing you can do, opposed to just trying to time it all. Where we are right now, I'm expecting we hold price and rise opposed to just starting to tank. I don't think we're going to do that. I think the stochastic is probably going to just consolidate more, potentially move down a little bit, but I think we're going to see a much more consolidative period here.
Now, the volume profile we've been looking at quite closely, we're just blown out of that now, it looks like.
We are definitely out of the range, and it's been quite bullish. The market structure has been bullish, undoubtedly. And then we actually found support on that volume node there, which has been nice.
Yes, because I wanted to sort of talk about this against the backdrop of these 60-day cycles, because when you look at that move that's happened in a traditional 60-day cycle, we would expect, I'd expect this one to be right translated, which would mean we've probably got another high coming into the end of the year by looking at that, but not necessarily right now. And that might line up with that.
Definitely potential for that, actually. And especially with the CBD, it's looking quite bullish. But that's obviously still short term. But yeah, it is looking like it's going to turn out that way. So yeah.
But you wouldn't be surprised to see a pullback.
I wouldn't be surprised to see
that it can get up to a new high.
I also wouldn't be surprised if it did rise. Right, this is kind of paradoxical, but yeah.
Yeah. Sure. That would make it a left translate. Yeah, it's a tricky one there. We'll see how it unfolds. But traditionally, I would expect a high still to come somewhere in the next, well, probably what's looking about 40 so or so.
Yeah, personally, I would expect it to.
Now, the CBD, you've been talking about this to me quite a bit. We've got a divergence here. This is one of those few cases where it's really, really clear. What's your interpretation here?
Well, I'll start with the first red line I drew. So you can see that one, obviously the price was rising and then the CBD was just sideways. So that's not a big divergence, but that just shows you that the divergence is very apparent, and yet price obviously pumps up from then. So what it's essentially saying is there's a lot of market shorts in the market. So that's what the CBD is. And then the market price, which is obviously the candles, reflect the market orders and limit orders. So then you can tell and sort of look at from a skeleton view what's actually happening behind the scenes. Right now, we're seeing a lot of shorts enter the market, yet prices trending upwards. So that's actually quite a bullish sign. And people will look at that, the pattern you can see there, and think, oh, it's struggling to make new highs. It's starting to consolidate like that, and they'll get quite bearish. So in my eyes, it's quite a bullish sign that we're seeing that CBD divergence on the bullish side. So yeah, I'm personally expecting another high.
That would line up with what we were just saying. Now, you also brought this in, and we've had a lot of discussion about this internally recently, how the dollar fits in, the DXY, of course, being the dollar index against what we're seeing with the Bitcoin price, because traditionally they tend to be at least a little bit inverse correlated. So you'd expect as the dollar's rising, it puts pressure on Bitcoin. That has not been what's happened recently. The dollar's been really pushing up quite strongly, at least in the what we'll call the medium term here, and Bitcoin is following it right up. So what's your interpretation based on what you've bought in this chart here today?
I'm just looking at it purely from a technical view. And I want to ask you guys on like the more political side of it, especially with Trump's administration and everything. But from a technical viewpoint, we're actually at the top of the channel. We're also seeing the stochastic start to flicker and say that we're probably exhausted. The market cipher potentially says a little bit more upside potential. But yeah, the relationship's obviously a little bit different than what it has previously been, because Bitcoin rises and the dollar generally starts to decrease.
Well, you can see that so clearly.
Yeah, highlighted in there too, and even the other way around, when Bitcoin's in the bear market, the dollar's rising. So obviously it's going to be interesting to see what happens. And right now we're seeing them go 1-to-1 together upwards. So
Joe, is this just an impact of the election? Obviously, the election impacts the US dollar. Is this a short-term phenomenon where it turns the other way? Has something fundamentally changed? How do you think about it?
I'm not too sure, but from a technical side, it kind of looks Yeah, I actually don't know. That's why I want to hear what you guys have to take on it.
So, Joe?
Because it's going to be quite an interesting one.
Yeah, so I to say it's a long-term trend, I don't know. Like, we've obviously been trading in the channel for quite a while. When you're looking back at this chart specifically, it's when it really starts to break out and makes quite a heavy move that it really impacts Bitcoin's price, whether it be the downside or the upside. So I think while we're trading within this channel, Bitcoin can certainly still rise. I would expect, after the Trump was elected, there's a lot of talk around tariffs and bringing, boosting the economy. It's all about, loosening regulations, reducing tax. So you get a lot of capital flight back into the US, which can certainly rally the dollar. Now, I would argue that at the moment, we've certainly got an overbought dollar, and we would expect that you would at least get a correction, if not maybe even potentially a chop sideways or back to the bottom of that channel, which is obviously going to be quite positive for liquidity, and that can play out over a number of weeks. It's when you break through either one of those channels either way, and you get like a real high velocity move. That's when it really starts to impact assets. So it's something we definitely got to keep an eye on. But at this point, I would say it's probably due for a bit of a bounce down and reconsolidation.
Well, you don't generally see this. I mean, there are periods, but you don't generally see this many strong green candles in a row. But probably to your point, zoom out a bit and go, is that a massive move? Well, historically, probably not. Like we've seen much larger. So maybe we're just looking a little bit too closely.
Yeah, and it's been very narrative driven as well. We've spoken about narratives and sentiment already a fair bit today, and once Trump was elected, there was certainly a lot of narrative around what he was going to implement, and that's driven a lot of what's happened in the dollar over the last couple of weeks.
And you really do have to remember that there was a very significant election in that process that is going to have an impact on markets. The pie indicator is one that you've sort of we bring back from time to time. It is quite popular. People do like to look at that. It's what story is it painting for us, Isaac?
I just thought I'd bring it back because we're starting into that time in the cycle where it's good to introduce these back and have a look at them. Obviously the bands they're still very much expanded, but obviously as we go later on in the cycle, we're going to see them converge, and we should see them converge. Whether they touch or not, that's going to depend on how high price reaches, and how it does it on like term of time frames. So it's going to be quite interesting to see. Definitely one I'm going to be looking at, but I don't know if it's going to touch this cycle. It's just very hard to predict that.
So it's not necessarily about touching, but it is getting
it's
getting closer.
Timing.
And we love these liquidity zones. It was such a magnet, and we talked about this multiple times over the previous sort of months, that we had this big band right sitting at that high that once it hit, it was going to just bust through. That's exactly what happened, isn't it?
Yeah.
What does it look like now? Because if you go, I mean, you've got that on the high time frame, and you also I'll bring the next chart up when you're talking about it with the shorter time frame. But are we just there's nothing there now?
Yeah, there is nothing there. That's the blue skies territory. The only stuff that we have is just more so the traders that are shorting the top. Then you have a bit of liquidity down the short term time frame from the buyers and stuff. But in terms of big chunks, it's nothing like how it was before.
And this short term, that's just what you're talking about.
Yeah, you can see that you have traders shorting the top there, and you've also got buyers putting their stops and all liquidation levels around those regions. So nothing crazy like last time, because we had so much shorts build up, and that's why I was sort of speaking about the idea that we would have that large bust up once you claim those levels, which is what's obviously come to fruition now on the backdrop of the election and all these different things. So that definitely fueled some crazy price action over those last few weeks.
Well, that brings us to the end of really all of our chart analysis. It's been certainly a fascinating several months that we've been doing these videos. We've gone through a big part of waiting, I would say, for a lot of it, and then we're starting to see the real. We saw those real big breakouts and everything sort of come out as we were expecting, which was very exciting. So just to wrap it up here for the year, we will be back in January next year to see how all this went. I thought it'd be good today if we could sort of get your final thoughts to wrap up on where we are, but more importantly, maybe the bigger picture view of your predictions for 2025. So, Isaac, I might start with you. What's your big picture view? Is it that it is that third year in a 4-year cycle type thinking? How are you going to view it?
I'm definitely thinking a lot higher than what we are currently. I'm not going to give targets specifically right now, but yeah, higher is expected. And the time horizon as to when I think the top's going to be in, it might be a little bit shorter than what you guys would what you say, Chris, in my opinion. But I'm going to get there when I get there. I'm not going to start picking months yet. But this what I'm going to be looking at, all those metrics I'm going to be looking at, and then I'll base it off that, right? It's just too close to sort of, or too far away right now just to sort of predict that yet. Like I said, we're now in the stage where it's just hold and stay safe. That's what I'm saying.
I might go next and give you the final sort of thoughts on this, Joe. But I'm starting to back up what you're saying there, Isaac, that the potential is that it actually peaks a little bit earlier than we were expecting. We've always been saying, or really all year, we've been saying we expect late 2025 to 2026 to be the liquidity cycle high, and that we would see the peaks in Bitcoin into that timeframe. It possibly could be earlier. And part of what's drawing me that way in my thinking is just that we might come out of the gate really strong with these policies that Trump's talking about.
Yeah.
And certainly things like the legislation that Joe brought up in the video today. If we start to see some of that really come to fruition, it's possible that the market just front runs all of that liquidity to come, and we move from following along and that sort of nice correlation that we've seen with Bitcoin to it really just getting very speculative. And in that case, I'd possibly be looking to exit a little bit earlier, and maybe we're not even at the end of the cycle.
Yeah.
So that's probably my view on that.
I think one of the metrics that will be important is the velocity that Bitcoin's going to be rising up, especially if we start to have all those policies introduced. If we're starting to see very euphoric run up, buyers will run out eventually, narratives will change, and so that's why I have that opinion. But obviously, it's too far away to say yet. But that's just obviously that's my prediction, so that's what I'm going to say.
Well, no one's given us the $1 million Bitcoin target. They're not prepared to lock it in yet. But Joe, bring us home. Where are we heading 2025, or any other comments you want to make wrapping up today?
I actually agree with a lot of what you said, so I'm not going to repeat it. You've got two opinions, one's not that are the same, one's not needed. But I'll take it down a slightly different line with regards to just like lifestyle chips, and we've gone through a couple of years now where if you're lucky enough to get in early, or even if you're lucky enough to get in 12 or 6 months ago when you started following us, at some point you need to take a serious look at what those investment gains are going to provide you in terms of your lifestyle, whether it be just paying off debt or something that you just wanted for a long time. It's about realizing your investments into something real. Now, I'm not saying you take the whole lot off and do that. I'm just saying, it might only even be a very small percentage, but it's definitely something that everyone needs to think about and consider.
I want to ask you a question on that, because like a bit of a personal question, because you and I both, when we think about the last cycle, that was one of our big regrets, really. We'd hit sort of all-time high net worths. Everything was going really well, and we just didn't take that advice, did we?
No, it's very, very difficult during that period of time when it's all happening to sort of think, because greed's quite a strong emotion, and you think it's going to go up forever. But and you don't, like I said, you don't have to take the whole lot off. It's just something that you can look at and go, okay, I've done well. I'm happy to take off this amount, this X percentage, and I've got something to show for it. And worst case scenario is that you miss the top, and you've still got something to show for it, whether it be debt or.
I was going to add something. People like want to have like a certain round number in their portfolio, this sort of stuff. It's not about that. It's about, if the market is overheated and we're seeing that time in the cycle, you just got to start to think about getting out, like scaling out at least, right? DCAing out at least, opposed to just leaving your whole bag and thinking you're going to time the exact candle top, which a lot of people do, and it never works out. So
even if it's a bit early, you don't even need to wait for that overheated market. There's nothing wrong with taking that a bit early. But that's all I'll say on that.
So okay, so you're just saying take some out at 900,000. You don't have to wait for the million. That's what you're saying.
Whatever you're ready.
Look, I'll be here telling you guys it's time to start switching.
Okay. Yeah, righto. Well, thank you everyone for following us along on this journey this year. We're very excited for the potential of what we can bring back next year, and it's going to be an epic year for Bitcoin. It's going to be a very interesting year for the markets generally, global liquidity, all of it together. As I said, thank you for following us along. Thank you, Joe. Thank you, Isaac, for everything you've done this year. Wishing everyone just a wonderful Christmas holiday break, and we will see you back in January to welcome another year. So thank you, everyone, and we'll talk to you again soon.
Yeah.
Yeah.